right, hello everybody. It's Jeff Gibby here over at MetaStock. Good morning. It's a nice looking day outside. I hope you guys are doing well. And thanks for coming today. I know from the polling we did a little bit earlier, most of you came to Thursday's session, so thanks for coming back. And welcome. Welcome to today's event. Let's go ahead and get underway with things. I'm going to move my face over here behind this question so I don't see it as much. Let's go ahead and read today's legal disclaimer. The demonstration today is designed to instruct you on using MetaStock and accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any trading decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. So there you go. I know you guys love that, probably as much as I do. But thanks for coming this morning. It looks like we have another good crowd. So let's get underway. Let's get to the main event, shall we? You guys know Rahul. Most of you came to last night's session. I do really I love Rahul. Rahul is by far, well, I mean, his methodologies are exactly the reason I started trading with real live money. So we'll start with that. He's also been a partner of ours for a number of years. He runs a company called Veritech Software in India. They have about 6 offices. He appears on CNBC. He's a great technician. And I don't even feel like I need to introduce him that much. Everybody knows who Rahul is. So let's go ahead and bring him on here. Rahul, welcome today.
Hey, thank you, Jeff. You're always very kind with your introductions.
All right, good. Good.
Thanks, Jeff. Welcome, everyone. And I appreciate your coming. For those of you attending the second one in the series, welcome back. I know it's different hours for a lot of you. I just went through the list of attendees and kind of put a face to many of you folks. And well, to those who I don't, welcome. I hope to see you sometime in person maybe. And I think definitely today's session is again going to be a really powerful one. I enjoy the fact that I can help traders become more and more independent. I said this in my last session, that it's very important that we as traders become independent when it comes to the decision-making process. I think the number one mistake a lot of us make is we depend on too many external factors, which finally results in a lot of confusion. So if you're going to depend on, different things, different pieces of media, different newsletters, different pieces of advice, a lot of television, I don't recommend that. I think one needs to streamline, one needs to focus, one needs to trade to a plan, rather than coming to this market and planning to trade, if I could put it that way. So I think the ATM is one of those tools which does a fantastic job in terms of helping you work to a trading plan. And just to give you a bit of background, now a lot of you do know we have the RMO oscillator and template inbuilt inside of MetaStock 10 and higher. And a couple of years post the RMO, I did build the ATM. Now, before I released the ATM, I practically traded with it with real money and still do trade it virtually every day with real money on both stocks, futures, as well as options for that matter. I trade international markets more than the Indian markets. And, it's been a very pleasant experience so far, and of course we all have down days, but in the main I think it's got a standout performance. And as the name suggests, ATM, it actually means automated trend modules, and the idea is it would automate our analysis approach so that we can focus more on the trading aspect rather than the analysis aspect. So when we're looking at the ATM, we're really looking at this as a tool that automates our analysis, helps us stay focused, stay streamlined, and not get into the emotional aspects of trading. I would probably start by saying is when we look at theory, when we read a lot of books, And nothing against these books. There's some great authors, some great books out there. And I'm just trying to talk about some classical methods. You know, we draw trends in this perfect upward fashion, and we fit this line in beautifully. It does work sometimes, as in, but the charts that we look at nowadays are more haphazard than such straight line charts. So when you look at the right-hand side, which is what I've labeled as real world, that red little line chart there, that's more like the chart we guys seem to be living in more often than not. And when you try drawing that same kind of line, you're always wondering, how do I twist and turn and fit in that line? And sometimes it just doesn't fit in. Well, even trends today are a lot more complicated. The volatility is stepped in. It's a more advanced market, and I think you need sharper tools to adjust to these kind of markets. Well, if you do have a straight line move, great, but in the main, we have to consider the fact that in the real world of today, we need to have more advanced tools, and that's what the ATM does for you. So first and foremost, we call this the RMO ATM 2.0, and just so that you know, we did a very recent upgrade. Well, not immediately this year, but just last year we upgraded the RMO ATM, and that's when 2.0 came out. We did a couple of releases post that as well. We did 2 or 3 releases, different builds, as we kept on adding and cleaning it. And the best part is we added what we call the ATM Power Screener. And the Power Screener is an amazing scanning utility. It's not just the ATM is more the indicator suite, which we use inside of MetaStock, and the Power Screener is like a separate application that we can use for the scanning aspect. And I have a separate class that I'm doing alone on the Power Screener and how we integrate things and put everything together. So we'll do that probably on the 10th, and hopefully if you do attend, you learn a lot more on the Power Screener. But today is all about discussing the core ATM modules and showing you the different strategies it has. So first and foremost, the important goals of the add-on. The first important goal is to help give traders like you and me a rule-based approach rather than a subjective approach. The second very important thing is when we trade in the markets, we do need to have breakout-based indicators as well as counter trend strategies. So just to help you understand what I mean here, breakout is when a stock's going up and you're buying it. Counter trend is more a bottom picking and top picking approach. And then you also need studies which help you understand where the market is sideways. So we need to have indicators and strategies which look at all the 3 different elements: the breakout phase, the counter trend phase, and the sideways zones. Now, the third very important, and probably if you asked me the single most important reason I used the ATM and I built the ATM, was the fact that it can be adaptive. It kind of provides you that benefit of lag and responsiveness as and when you need it. Now, let me explain this to you a little better. So let's say, for example, if you used a moving average and you used a 10-period moving average on a particular equity chart or Forex, whatever you trade on, it may work great, but it could be that there's a different moving average which works better for that symbol. Now, obviously, every symbol will have a particular value to which the moving average would work better to. So maybe in some chart, a 29 period is good, and in some a 30 period is good, and in something else a 50 period is good. So this adjustment or selection process needs to be adaptive, needs to adapt to the chart and volatility that you are trading. And that's what the ATM does so well. It does that adaptiveness. Now, when I used a lot of adaptive and so-called optimized tools in the past, and I can tell you, being a real-life trader for over 20 years now, I have probably used a lot of stuff out there, and in the quest to becoming a better trader, we do a lot of things, and fortunately I've had the privilege of attending a lot of seminars, speaking and interacting with a lot of international pros, as well as using a lot of their software right up to stuff which is in the beta stages. And there were some programs, when they used the word optimized and adaptive, they would change signals that it stamped in the past. Correct. They would actually go out and change. So in other words, if they told you to buy 5 days ago and the market didn't go up, it adapts and says, no, I told you to sell. And that was almost like backstabbing, in my opinion. And that's, unfortunately, it's a mean world out there. And you have to understand the fine print about adaptiveness and optimization. So when I built the ATM, I made sure that whilst we become adaptive to the current, we don't change any past signals. So if something was a buy, or something was red or blue, or something had a certain level or arrow on a particular date, it never changed, because there's got to be continuity and reliability. So we are adaptive, but making sure we don't change any past signal. So that's the real good thing about the ATM. So if you're in a very volatile stock, the indicators adjust to it. If you're in a slow-moving stock, the indicators would accordingly tweak itself to give you more efficiency. And lastly, the Power Screener, which is an efficiency tool which automatically scans for you in real time, that gives you all the opportunities. You don't even need to go to the Explorer and run a manual scan. It's scanning all the time for you. It's a hands-free approach. You don't have to look for it. It even talks to you. It even speaks out by XYZ symbol because there's a breakout catcher alert. So the scanning is a huge efficiency tool. It can scan on stocks you choose, on time frames you choose, on models you wanted to scan on. And one question I often get before I dive into the different indicators is the fact that, can I use the ATM suite for end-of-day trading or real-time trading? You can use it for both. You can use it on end-of-day, daily, weekly charts. You can use it on 5-minute charts, 15-minute charts, whatever you trade on. It works on any time frame of your choice. It works on any asset class of your choice. And of course, I must add, when we originally built the Power Screener and released the Power Screener in 2016, early 2016, it worked only for those of you who had MetaStock Zenith, or in other words, real-time data. However, post July or August 2016, you can use it now with end-of-day or offline data, right? So that's the good news. So if you just have MetaStock end-of-day, you can now use the Power Screener. The Power Screener works with offline end-of-day data as well. Okay, so with that out of the way, let's dive into the first strategy. And I kind of almost touched on it in my last webinar, where I talked about the ATM RMO. Now, we discussed the RMO system, which is inbuilt inside of MetaStock, but this is what we did. We built what we call a super filter. And I can tell you, when I upgrade a system, I don't just release an upgrade every few months for the heck of it. In fact, I didn't. The ATM got upgraded after a couple of years. It's because we really work hard on the testing, the reliability, the fact that when we release something to you, I want to make sure that it's definitely better and it's definitely adding value to you. So let me drive this in, that the ATM 2.0 is scores over the ATM that was originally there. So the original ATM was great, but then with the 2.0, it's just fascinating. We gave you 3 new strategies. We gave you the Power Screener application, and of course my favorite super filter, which I use so much. So what is the super filter? To simplify it all and to get everything out, I wanted to filter out the RMO signals, the inbuilt RMO. I needed to filter this out and make this adaptive. So what I did was I colored the bars into 4 different shades. So you would notice that there's a light blue over here, which is bullish. There's also a dark blue here towards the right. The dark blue is very bullish, or rather the strongest form of bullish. Red is obviously very, very bearish. Orange is also bearish, but may not be extreme. It just gives you an undertone. For example, if it was deep red here, and when the deep red started turning to orange, you get a feel that, okay, from the extreme bear phase, you're now bear. So you get to understand transition a little more. The chart starts talking to you. Now, how does it help me filter the RMO? So somewhere, where you see, if you just look at this area over here where my pointer is, you would notice the RMO went from negative to positive, negative to positive, negative. And this whole phase was kind of a bit of a mess. And if you looked at the original bar colors, which was red and blue, you might have actually got triggered into a buy and a sell both ways here. And with the new super filter, what it does, it efficiently marks red and orange bars, forcing me to remain on the short side or sell side. It forces me to stay bearish and not, swivel around with the indicator. So it's kind of filtered out the RMO signal itself. And secondly, when I broke out, when I got my first down break, when I got the red colored bar and the RMO went down, the really nice thing is I could really establish that, hey, this is not just a first breakout, but it's also with a dark red color, the bright red color, and that means it's a very confirmed or the strongest form of selling. So those colors really do the talking. Now, just to get into some more charts, this is probably an hourly chart here of Apple, which is almost up to date. And I was trying to identify with where the RMO signals were. Look at what the RMO did probably towards the end of April. We went below zero, above zero, below zero, all of that stuff happening. And that's also visible on the x-axis. But that light blue, the fact that it was light blue kept me in shape. It kept me thinking, oh, it's still bullish. This is just a correction, probably, and didn't make me worry too much, right? So this is a really nice thing that it gives me the ability to, stay on the trade, and the small little whipsaws, if at all they do come in. Yes, you can filter it out manually. You can look at things like volume, Fibonacci, etc., which I talked about in the previous session. But again, the fact is, with the light blue, it just makes my job so much more easier. Now, in case you have any questions, I'm definitely going to keep some time aside at the end for some questions. I'm just trying to gain some flow here. So if you have questions, probably Jeff will help moderate in, and at the same time, we'll have some Q&A at the end. Now, looking at the sell, when Apple gave me the sell right there, comes in with a first red colored bar, which is really good, then the RMO bearish, and that helps me kick into the sell side of a trade. So what I can tell you is that the new bar colors of the new super filter model is a lot more efficient. Now, the other great thing is the RMO originally never had commentary, but now with the super filter, it has what I call the ultimate chart checkup. So it gives you actual commentary, not just on the super filter model, it actually does the ultimate chart check, which means studies all the various models of the ATM. So you can right click on the chart, click on Expert Advisor, and look for commentary. So to recap, what the super filter does, a lot of the small, little whipsaws, which sometimes would happen, it smoothens that out, and you can really decipher that there's a nice big bull phase or a bear phase. You're not too worried about the fact that there's going to be a lot of chop. Now, the other really nice thing, and follow me here, this is where the RMO super filter comes in so handy. Notice towards end August, you see red colored bars where my mouse pointer is. So those red colored bars are a first-hand indication that the RMO is possibly in the phase of turning below zero. It didn't turn right there, but you got the hints. Dark red. It's not even orange. It's a dark red. And that's what was telling me that it's going to change, right? So you can see how the super filter is faster than the RMO over here. That's what I call adaptiveness. So sometimes the actual super filter colors are faster than the RMO, and sometimes they would be slower. For example, right here, the RMO was quick to give you a sell, but the colors slowed down and said, no, 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 stay blue, stay bullish, don't get into a sell. So that's the adaptiveness that I'm talking about, the ability to stay slow here and the ability to speed up here. So that's the really nice thing. And when you use this system, it's so nicely tunes in. So once you use the super filter, I can tell you'd really enjoy the process of understanding trend transitioning and the fact that it can smoothen out the RMO signals itself. So to recap, here's another example of smoothing. You can see it goes from bullish to bullish, but it's all blue here. It doesn't knock me out in terms of the trade. And like here, for example, it gives you the dark blue, even though the RMO is negative, giving you a first-hand signal that there is a likelihood that the RMO will go above zero, and it gives you some readiness for that change. So I hate keeping on comparing it, but I get the question so often. So let's do a quick comparison. Here are two charts. Right at the bottom is the original RMO system, and you can see what happens over here. You get a couple of red bars, and you get the RMO which goes negative. If you look down at the x-axis, you can see the red color creeping in. And that's where we might get a little fumbled up. Now you could check things like Fibonacci, volume, etc., try and reconfirm, but you know, there is a bit of a chop which you need to kind of go through or walk through here. But when you see these colors, the light blue straightens it out. You know, it straightens things out in terms of trend and doesn't make me go and sell the market. Pretty much like this red bar that comes in here, there's no red bar here. Pretty much like this. So even though it slowed the indicator down here, look at here. When you got the buy arrow over there, you got it on a light blue here versus a red. So that's the adaptiveness that I'm talking about, friends. So with the super filter, you're definitely legs over, you know, than the original RMO. So trust me, if you experience using the super filter, and you can even use that commentary if you're getting confused, that's great to start with. I would urge you to move on and you know, move to the super filter. So that's the super filter. And in case you're wondering, how do I apply this template? Now, usually you would right-click and apply RMO trade model for the original RMO. So the one that you need to apply to get the super filter is right-click on the chart, click on Apply Template, and select ATM RMO. I repeat, it's ATM RMO. So don't get confused. There's an ATM RMO 2 as well, which is more for the options folks, and I'm going to come to that. But the super filter is available in the template titled ATM RMO. All right. So having said that, let's move on to the different indicators that are included. So we'll discuss the different strategies today. We've got the breakout catcher, the zone detector, the zone fill, counter trend indicator, the newly released strength weakness index, which is a volume-based study, amazing tool out there, and probably my favorite, if you asked me, beyond the super filter, would be the trend decider suite. I just love that suite, and we'll talk about that. It's a newer edition, and I've done a lot of work with that in markets, so I'd urge you to look at those trend deciders as well. So let's start with the breakout catcher, really simple tool, probably one of the most widely used indicators. When I kind of talk to users, I sense it's probably a big favorite. And the fact is that the breakout catcher is actually fairly simple to use. So let's walk you through first a basic buy and sell signal. So when you get a vertical line, and these are automatically plotted, and everything has a template. So if you apply template, you will have a template titled ATM breakout catcher, and that's what you will get. So you will get red colored bars, olive colored bars, and blue colored bars. Obviously everything is automatic, and you know, it does plot it on its own. So red colored bars indicate a sell signal, and obviously we want to take the first sell. We want to take this one. We don't want to take the second one and the third one and the fourth one. Those are more add-on in nature and more supplementary. I really want to work with the first one that comes in. Now the other thing which I'm definitely going to talk about is the indicator right on top, which is the zone detector. So let's get into the zone detector first, and then come back to that chart and discuss it. The zone detector, when it's at a value of 0, it indicates that the market is dormant. And the zone detector is actively studying both volume and volatility data. And if there is really a lack of volume and volatility, or the market looks sideways, it is at a value of 0 or dormant. So if you get a buy or a sell signal in dormant mode, you should really question it. You should really ignore it. If you want to take a trade in dormant mode, you've got to have very good reasons complementing the signal to even attempt it. But personally, don't take trades on the dormant mode. And this is a great indicator to kind of blend in with anything that you use. It's not just for the breakout catcher. So let's say if you're someone who likes using a MACD or an RSI or moving average, if you are getting any breakouts based on any indicator models you use, try and see you're not getting signals in a sideways or a dormant market. So if the zone detector is at a value of 0, I would urge you to think twice or avoid trading. If the market's active, you would see the zone detector at a value of +1. Okay, so we call that active. And when you see that you have what we call the zone fill or the fluorescent green histogram lines right here, so that's a phase where the market is hyperactive. In other words, it has both volume and volatility. So therefore, you want to make sure that any signals that you get buy or sell, breakout or counter trend, if you get them in a hyperactive mode, you want to respect those, you want to pay heed to those, and take those trades much more happily. So let's get into the chart first. So just to recap for you, the first breakout is the first sell-in chain, or likewise after a downtrend, the first buy-in chain. Why is this called an add-on? Because it just turned to a mustard or an olive-colored bar and then turned back up. So we're not really excited about this because this is more like a buy within an existing uptrend. So we need to focus on the first breakout. The add-ons are, of course, add-ons, as in if you want to add on, you add on, but they tend to be riskier. They're obviously much later and deeper in the trend, which means from a risk to reward angle, they are definitely a shade lower. So when you're trading based on the breakout catcher, and I reckon this is probably a chart, a daily chart of Exxon that I'm looking at right now, if my memory serves me right. Here's a screenshot of it. This is a daily chart. So when you get a red bar, you want to go look up at the indicator. So that histogram is the breakout catcher. And the breakout catcher is built around a lot of different indicators. And we've kind of looked at different elements to give you a buy or a sell here. And you'd find the efficiency so much more than conventional indicators. If you put on a simple MACD, you'd probably have a series of buys and sells all over the place. And for that matter, a lot of indicators. You might put on a 20-period average and see a lot of chop. So the breakout catcher is really a lot more refined. Okay, there's a lot more packed in into the indicator rather than just one or two different things. So when you look at the breakout catcher, I want you to look right up at the zone detector. So you got a sell signal. Can you notice over here you've got the market as probably a dormant mode, but the next bar you see the market going hyperactive, which is why I would say this bar looks like probably the first week of January itself was the breakdown, and that's where we could sell short or buy put options and get an idea that the market is going to crack. So that's a breakout catcher sell. It's a first sell because it's happening after an uptrend. And this is where it gets good. It has a labeling on the x-axis as well, where it looks at the strong and weak phases. Now in between we got a blue bar. But notice I always use that rule of trigger. And remember, if you get a blue bar, you're going to look right up at the zone detector. It's hyperactive. So I want to buy above the high. I definitely want to get out of the short positions, but we need to be buying above the high. If it does not cross the high, we have not bought. We have not got triggered into the buy side. So even though the signals come up, the trade's not triggered in this case because our simplest confirmation is buy strength. Buy above the high. So once the signal completes, don't just see a signal and trade. Put in that rule that I'm going to trigger my trade above the high of the signal bar. So notice here it doesn't trigger you in. You get another sell, and this is definitely an add-on. Do we want to take an add-on sell? No, because first of all, it doesn't break the low. Secondly, I just told you that we want to focus on the first sell. Okay? Here we have another add-on sell. Again, these are dangerous. And why is this more dangerous is the fact that when you look up, you see there's a dormant mode. We don't want to take it. Here comes another buy. And when you look up, you're looking at a hyperactive. So you want to take a buy above the high. Again, does not trigger, does not go above it. You have not bought. There you are. So, the same process. Sell signal, look right up, dormant or sideways. I am not going to be selling even if it goes below the low because it's an add-on trade, it's dormant. I want to avoid these. Again, you get a buy. Flips out into hyperactive, but we got to see what it does in the next couple of days and follow up with the indicator and see if that happens. But that kind of gives you a first-hand feel in terms of how easy it becomes when you look at it. So the process is very simple. When you get a buy, go look up. You get a sell, go look up. You get a buy, go look up. So if you're getting a buy, it's dormant, not doing it. Getting a sell, hyperactive, definitely doing it. So I get the question is, can I take a trade in active mode? Oh yes, you can, but I don't want to take a trade in a dormant phase. So the volatility, gets handled very well. For example, this part of the chart, extremely volatile. The size of those bars are very big, and you can see how the indicator has done a fascinating job there. Not whipsawing you over there. Likewise over here, you have much thinner volatility where the bar sizes are much smaller. Still handles the trend, fairly well over there. So again, these are good ways to understand the adaptiveness or the adaptive concept which is built in the ATM suite. So that's really the highlight. A lot of times you get a buy signal, you look up dormant, don't take the trade. You get a buy signal, hyperactive, I'm going to buy it only if the high gets taken out. Keep those rules intact, helps us stay disciplined. So the same downtrend when you look at it on conventional indicators, and nothing against conventional tools, but I just think in today's day and age, when computer software can help us do so much more, get more adaptive, get more efficient, the whole visual understanding of that chart is so much easier. Just look at the way we've been knocked around with different buy and sell signals. A lot of you who use the RSI will say, oh, the RSI is at 20 and 25, getting a positive divergence. And nothing against it, but I've done my R&D, and I've figured this out, that a lot of times the divergence keeps on extending. When it gets to newer lows, you'll keep pulling that line more and more and more. So, the fact that you can use stuff that's newer and more efficient and more adaptive, is a very big plus point. And the fact that the whole visual, the whole experience of just looking at a chart like this makes it so much easier for you. It makes you so much more efficient. I keep using this phrase that finally we are the trader, we're not the analyst. What matters to us is our trading result. And if the ATM can help me get to be a better trader and work more on my money management and my trading skill set and can automate the analysis for me, that's what we really need today. Okay? So again, these are more comparisons. So people ask me, look, if I use the RMO or the super filter model versus the breakout catcher, how is it different? Now again, you don't have to use every single ATM strategy out there. Well, I've offered a different suite of tools simply because they're people who work to different profiles. Like the RMO is more trend following, but the breakout catcher is more momentum. If you're looking at short-term momentum as well, it's going to give it to you. For example, look at this sell which comes in here on Apple. This is a red bar. You got it in active mode. You can go short, and that's a nice little drop you get. But when you look at the RMO system, you're probably not going to be selling. You're going to wait till the RMO turns negative, then it doesn't break the low. So it's a difference in terms of perspective. For example, here the buy kicks in faster. So the breakout catcher does turn out to be a little faster. And if you're more the impulsive type of trader who's willing to get into it even shorter term or quicker, you probably would like the breakout catcher. So suit your way of trading. And that's why we've given you both the breakout catcher and the RMO super filter models as well. So take your pick. If you're a trend following guy, not worried about the 5 or 10 bar drop, but more interested in the 50 and 60 bar rise, maybe the super filter is more for you. Now, the RMO2 plus and minus. So we plotted the RMO2 plus as a blue bar, or rather the blue indicator over there, and the red line represents the RMO2 minus. So I've mentioned over there, it helps you really for an options trade. So, there are enough tools we've got here in the breakout catcher and the super filter to help me detect the trend. Whilst the RMO2 does have the ability to tell you the trend of the market, so pretty much when you look at that over here, if the values are negative and the red is right there, it obviously means the market is looking bearish. But the real goal of using the RMO2 is for those of you folks who trade options. So if you don't trade options and you're even considering getting into options, maybe you want to just start by buying simple calls and puts. And let me take that kind of a strategy approach here. So if I had to first of all understand the trend of the market, if the RMO2 is at a value of -1 or the red is below 0, that means the market trend is negative. Okay? And if the indicator is at a value of +1, you are obviously looking at the market being in strength mode. Below it, -1, market is in bearish phase. So trend detection, fairly easy. But where do we actually use it? Where do we buy those calls and puts that I just spoke to you about? So wherever the indicator drops from a value of +1 to 0, we want to buy call options, okay? And usually when you buy calls, notice it would always give it to you on a pullback. So the market's probably dropped a good 4 or 5 bars. And calls are going to be cheap. If the market's fallen for 4 or 5 bars, people are more buying puts probably. Calls tend to get cheaper as the market goes down. So comes to 0, you want to buy the calls. You want to buy the calls. Check the volatility. If the volatility is low, in other words, if the market's actually dormant or active, that's going to give you low volatility. And low volatility means low premiums usually. Okay, so if the market pulls back to 0 and you can see, okay, I'm in active mode even, that's fine. But usually if it's hyperactive, I tend to avoid, buying options, because if it's hyperactive, you might be high volatility and premiums may be thick, right? So even if it's active, I tend to do it. But definitely this one's really good, because what's nice is it's pulled back to 0, and this time we're going to buy a put option because we're bearish on the market as the red pulls back to 0. Because when I look up there, it's dormant. So, wow, that's a nice drop to get. And usually when you do the RMO2 signal, it's a really good risk is to reward, because we're looking at a new high within 10 to 20 bars. Okay, if you hear me, that's 10 to 20 bars. So if you're on an hourly chart, that's 10 to 20 hours. If you're on a daily, it's 10 to 20 days. So it gives you an expectation of time, which is very important in options. It gives you the ability to understand the direction, because when the blue pulls back to 0, you're looking at buying calls. When the red pulls back to 0, you're looking at buying puts. So you got the answer in terms of direction. You've got the answer in terms of a time target. And in terms of a price target, it's going to lead to a new high in that 10 to 20 bars. So we expect it to go to a new low if you're selling, a new high for buying. And you can further top that up with things like Fibonacci to help you put some numbers to it. But bottom line, you've got an idea of direction, which is most important, time target, which you've got 10 to 20 bars from your trigger point, and at the same time price target, at least it's a new high or a new low. So really solid rules in place, and I can tell you, even if I'm 5 out of 10 or 6 out of 10 accurate on this, the risk is to reward is just so worth it. You really want to put on such trades. Now, we have a nice scanner. Everything that I do, whether you are used to using the Explorer, you have a scan to scan for pullbacks, so where the RMO2 is at 0. You can even go through the Expert Advisor. You have comments over there. So, you would look at this. It says the ATM RMO2 is in neutral zone. That means it's pulled back to 0, and therefore option strategy should be considered as a major move should trigger. Okay, so you've got commentary to back you up. You have the Explorer, and of course we have the power screener, which I'm going to discuss in the next master class that I do, the next webinar on the 10th that I do on the scanning abilities and how we integrate things. Okay, so we've got all of those things to help you through it. And so particularly for those of you folks on options, remember the RMO tool, great risk is to reward tool. And again, I keep telling this to people even who attend the live seminars, that please focus on risk is to reward. Don't worry if it's 5 out of 10 or 6 out of 10 or 7 out of 10 in terms of hit rate. I'm more interested in the risk is to reward. You could be even 5 trades out of 10 correct, but make double the money in your wins and lose much, much smaller amounts. So focus on that element, and that's what it does. It's beautiful, the fact that the RMO2 can help me kick into new highs, new lows, and give me that little timeline expectation. I do a lot of options trading, both on the Indian market as well as, for that matter, even the Australian market, and it's been good. And the fact is, when you are trading the option segment, it allows you to actually go short in a way. It allows you to trade the downward direction. So for those of you who are die-hard buyers, I would urge you to consider options to start with. Maybe buy simple puts. Give it a go, because at least you can participate when you can see a downtrend, because sometimes downtrends really are quite fiery, quite rapid. All right, so the RMO2 can be really easy and handy to use there. Let's talk to you about the counter trend and give you a quick overview on the counter trend. This is more based off volume, And this is probably the easiest tool out there, which is going to mark straight out buy and sell signals. So wherever it finds high volatility, high volume areas, it's going to see where those ranges break out and stamp simple buys or sells. In terms of a usability aspect, I would always urge you to use the first buy. So after a downtrend, look for the first buy. After an uptrend, look for the first sell. Don't look at the second, third, and fourth. So pretty much the same concept. Try and work with the first breakout. And also try and see that they're counter trend. And one of the easiest ways is when you're looking at a sell, if you're getting it after an uptrend, that's a good sell. Or a buy after a downtrend, that's a good buy. Okay, so uptrend, first sell, I want to do it. Downtrend, first buy. So it helps you understand that you're really taking the first signal, you're really trying to identify that it is counter trend. It's not going to work perfectly always. Obviously, all of these indicators, will have their drawdowns, but the risk is quite planned. If you're buying there and you use a signal low as your stop, well, you do have the odd bad trades, but where it goes correct, you can see you virtually caught the bottom and the top. So, great thing to try. Obviously, you need to be using these different indicators over time before you jump in and decide, okay, this is the one I really want to move with. But in the next masterclass, I will give you some hints as to what are the correct setups to start with, what are different approaches you can use, how do you scan for them. So I'll discuss that more in detail in the next session. This is really too rapid for me to go through every little detail. Okay, so the counter trend is very straight cut, and I tell people who get confused, use a simple moving average. So what I did was on this chart, I plotted a 30-period moving average, and I said whenever I look at a buy setup, I want to make sure that it's happening after a drop and it's below the average. Or if I look at a sell signal, it's got to be after an up move and it's got to be above the average. So consider a buy trade only when it's dropped and it's below the average. And notice, at least you get some rotation out there. Okay, if it doesn't follow up, well, unfortunately, you'll have to stop out at that immediate low. But if you do get it right, you got to drop. See, it's the risk is to reward that matters. If you caught that base, I mean, that's huge. If you catch that top, so you get close to catching those tops and bottoms, which are interesting. Okay, so use a moving average, 30, 35, whatever you use, but somewhere around that region. Okay, so make sure it's the first buy after a downtrend, first sell after an uptrend, and whenever you get a sell, make sure you're above the average. I don't like this sell. I want to make sure that the sell is above the average, right? Okay, the newer tool, one of my favorites, is the Trend Decider Suite. So the Trend Decider Suite marks for me 3 different levels: a Trend Decider daily, weekly, and monthly. And as the colors speak to you, there's a green color for the daily, and we have the monthly marked in a pinkish color, and finally the weekly in a red. So the Trend Decider, no matter which chart you apply it on, it's going to be using these different time frames to come out with a core level of support or resistance, or a Trend Decider level above or below which we expect a change in trend. So it's using a multi-time frame approach. It's going to 3 different time frames, getting the values for you and planting it on the chart you use. So whether I use a 15-minute chart, whether I use a 60-minute chart, whether I use a 2-hour chart, whether I use a daily chart, the levels of the Trend Decider are going to be the same. All right, so it doesn't matter which time frame you work with, but the Trend Decider daily level, weekly level, monthly level is going to be the same. So it's quite a nice approach to be looking at the fact that it does the multi-time frame. So just continuing with that Apple example, this is a very short-term chart. Probably, I reckon this is a 5-minute chart I have pasted up here. And you would see the green is the Trend Decider daily level, and the red is the Trend Decider weekly level. Pretty much like saying that, hey, if I'm above the green, I'm bullish for the day. If I'm below the green, I'm bearish. Okay, so you can see that it works like some kind of a support resistance as well. So for the day trader, he's going to use the green more actively. But this is where I say it gets very interesting when you can integrate that weekly level. So if I'm someone who trades for a couple of days and I want to understand where the momentum is shifting, if the green goes above the red, which happens right here, that's where the momentum shifted up. So if the price does not break the weekly level, it's bullish for the week. So you can notice on this chart, since the 20th of April, right up till today, we haven't really broken the red level. And notice the red is going to upgrade every week. So every Monday, you're going to get a new weekly level. Every day, you're going to get a new daily level. Likewise, every month or every first of the month, you're going to get a new monthly level. Now, if the green is above the red, you're really bullish. And the other thing you've got to make sure is if price is trading above both. So you might say, oh, the green dropped below the red here. Doesn't really matter because the price is trading above both. If price is above the daily level, price is above the weekly level, it continues to stay bullish. So to simplify, if I'm really bullish on an equity or a symbol, price over here has closed above the daily, closed above the weekly, and the green line is above the red, or the trend decider daily is higher than the weekly. So only if all three are in sync, you understand that the trend has shifted, right? Unless you're worried about intraday. If you're worried about intraday, if the price breaks the green, all right, you probably got some pressure for that day. Okay, so really nice tool there. I actually designed this for an institution who was trying to do some risk management, and we were trying to work out trailing stop models based on their risk profile. And I got to give credit to them somewhere, because they told me that, hey, this is actually working out to be a great entry model. And when I dug deeper and I tweaked the indicator a lot more, it just worked out so fantastically. So you can use the trend decider for trailing stops. I love using that weekly level. It's such a great way to trail, stops, and at the same time understand where the trend shifts. And all the there's a lot of chop on this chart. It's not been an easy price movement here, but the fact that I'm above my weekly level gives me some sanity that the trend is up. So how do I pinpoint? So when you mark the template, you apply the template, you're going to get this bullish and bearish right at the bottom. It's automatically doing this integration. These rules that I just talked to you about, that price is above the daily and the weekly, and the green is above the red. When that happens, it's automatically going to stamp it as bullish. So, it doesn't have to be detected by you. It's automatically detecting that. So that's where the trend changed. Pretty much like here. If the price closed below the daily and the weekly level, and we can see that the green has dropped below the red, that's bearish. So at least we can trade that immediate move. So if you're a momentum guy, you're going to really love this. So what happens over here? Price on this bar is closing or is trading below the daily and the weekly level, and you can see the green is below the red. But notice the low doesn't break down. Okay? So these are the nice things to keep in mind, that trend detection becomes so easy. And this is not an easy chart. When you look at the amount of chop, it's largely sideways for majority of this chart that's up in front of us. So trend decider, really great tool, very dynamic, updates every day, every week, every month. And if you bring in the monthly level, it gets very interesting, because sometimes you can see how the market's at such an important point of support. So for example, on this chart, I can see the market's dropped a bit. So the minute it broke this level intraday, I could sense that we're going to get a bit of a drop on the intraday. We got that pressure, came to that weekly level, and you can see how it nicely rotated right here as well. And you even get an idea that there's a monthly level. So colossal amount of support. Then when you break, what if the price goes below that level? It's going to be below daily, below weekly, below monthly, and boy, we're really understanding the transitioning of the trend. And if you're worried about the rules, look at that x-axis strip. You see all bullish all the way, which means you're all good till a red trickle comes in. The green has not gone below the red, or the trend decider daily is still above the weekly. So you're all good in terms of the trend. So the monthly really comes in as another kicker, or as another element which helps us get more efficiency on that trade. So when you plot it on a line chart, sometimes it becomes easier to interpret. You can see the closing below the, so for example right here, boy, that's a huge signal, because price has broken a daily, weekly, and monthly. Okay, and when that happens, you can really understand the transitioning process. So we've got some nice experts which do the whole job of interpretation right after telling you where the different levels are, telling you if the trend decider is bullish or bearish. Okay, so we've also added the other different indicators which are popularly used, just so that you can get it all in one screen. So I love using the trend decider. I use it every single day personally to put my real money on it. And again, just to remind you, I am not an advisor. I am not a stockbroker. I'm not someone who writes newsletters. I trade my own money, and that's what I do for a living, essentially. So from practical trading experience over the years, I can tell you this is one of those tools which is in my everyday arsenal. So we looked at a lot of price-driven indicators, but let's dive straight into what we call the strength-weakness index, and this one's based on volume. And what I really like about the strength-weakness indicator is it works only off volume data effectively. So that whole bit that we learn about, if price goes up with volume, it's bullish, and if price comes down but the volume doesn't incline, these relationships are married into the strength weakness index. It is analyzing the amount of volume a stock is going up with or the amount of volume a stock is coming down with. And based on that, it establishes the trend of the market just on the volume flow. So what it does is it simply marks out a line and pastes it on the price chart. And again, it really doesn't have anything to do with the price. It's really looking at the ratio with which the price went up versus the volume which it went up with. And when you see that the price is trading below the SWI line or the strength weakness index, you know it's a bearish market. And it's always nice to have a tool which is working exclusively of volume. For example, the trend decider works exclusively of price or on multi-time frames. But the strength weakness index works purely off volume. So it's very nice to get that volume confirmation. I love using the SWI whenever I take a trade just to get that confirmation that, okay, is the volume flow with me. It's so easy to use, and that's the fun thing about the ATM is that it's such a visual process. It's so hands-free that, you know, once you get used to charting like this and seeing charts that are so easy to, you know, adapt to, and most importantly, which are more efficient than a lot of conventional stuff out there, you are definitely going to love it. So the strength weakness index, very easy. It can't get more complicated. If it's really below that line, the volume flow is negative. If it's above that line, well, basically means, so do I just buy and sell alone on that line? No, I like to use the strength weakness not just as a standalone strategy, but I like to blend it in. So what if I looked at a trend decider level that's breaking, and hey, I have an SWI sell also coming in. So I kind of like to use the SWI more as a confirmatory tool than a separate indicator. And you know, that's what helps me a lot, because it kind of gives me that volume element, that volume perspective to confirm a lot of my setups. So let's say if I'm trading the super filter or the trend decider, you know, if I have the SWI kind of kicking in with me, it just helps me a lot to put some more money on that. And again, we've got the lovely expert which does the commentary bits for you and automatically plots that line, gives you color coding on that bar. So we've really thought the nth degree that every strategy that we're giving you, we're building in a template for you, we're building in a scan for you in terms of the Explorer, and plus we've got the Power Screen application which does the hands-free automatic scanning, gives you those email alerts when these signals trigger, gives you voice alerts where you actually hear buy and sell signals even if you're not looking at it, kind of reduces the dependency on you to manually run scans, because come on, how many scans are you going to run, and every time you got to remember, hey, I'm looking at an hourly chart, so every hour I'm going to run these 3 or 4 scans. So it just eases up the process and, you know, helps you do the shortlisting so much more efficiently. So that's what the Power Screener looks like. You put in, you know, indicators of your choice. So that's the breakout catcher, the zone detector, the trend decider, the RMO. Notice over here I can put a 10-minute time frame, a daily time frame. So all of that stuff can be done within the Power Screener. It's like my quote board, my go-to screen, the place where I have all my alerts set in, the place I enter all my different trades, watch how the market's moving, and you know, place trades that way. So really the ATM, to come back to it, is a very complete tool. You saw how we have a counter trend indicator, breakout driven indicators, trend following indicators with the super filter, the new trend decider module, which is great because that helps you not just from a trailing angle, it also helps you from getting new signals in terms of understanding where the trend's turning. and what the important levels are based off a weekly and a monthly chart as well. So it's really power-packed, the SWI with that volume element. We've really taught the nth degree experts which give you the commentary, scans which do the scanning. So there's a whole lot of power, and I can tell you I've used a lot of add-ons out there, and probably Jeff would probably confirm that for me. The ATM continues to be a top-selling add-on for MetaStock, and I can tell you that you know, proof of the pudding is the users come back and give us such great feedback, and that's what spikes us to do more, and that's what motivates me. So I personally use this with my own money, and I reckon a lot of you could change the way you look at charts, change the way you look at your analysis. It streamlines things for you, makes it easier, more hands-free, and of course there's a whole suite of tools, and you don't have to use all of them. You could focus with just one or two to start with. Okay, so if you're someone who does options, maybe you just want to work with the RMO tool. If you're someone who's more, a trend follower and you want to look at how momentum turns in the near term, use the trend decider with the SWI. If you're someone who's more long-term driven, use the super filter. You don't have to use everything. You don't need to go to a buffet and eat every little dish on that, right? So kind of giving you that idea that whilst there's a lot out there, because a lot of folks trade differently, you can really streamline things for yourself and become a lot better in terms of your trading results. All right, that's probably a complete overview on the different strategies that are there in the ATM. And I think the best way to learn it is to educate yourself. I've written a full manual on the ATM where I've penned down every word. So when you buy the ATM, you have access to that manual. There are some recorded webinars as well. And of course, there's the upcoming Power Screener Masterclass, as I call it, where I'm going to talk to you more about this go-to screen and help you understand how to scan and what are the different combinations to use, and give you some nice ideas on where to start and move ahead with. All right, over to you, Jeff, and then Q&A.
All right. Hey, Rahul. Thanks. That was great. You ready for a few questions?
Absolutely.
All right. I've written down a few here.
Okay.
Alexander asked, what time frame do you prefer to trade on personally?
Okay, I essentially look at two different time frames, and I have two different portfolios. One that I actively trade, and one that I look at more from a very, very short-term angle. So I use daily and I use the 60-minute a lot. So that's really the two time frames that I work with. And I probably think if a lot of you are wondering what time frames to start with, I think these are two great starting points. If you start with a very small time frame, you've got to be a lot more alert. And I think that's where it becomes a little easier if you start with these kind of time frames.
He also asked, and this came up a few times, but should we look at multiple time frames? Like if you're looking at something on, let's say, an hourly chart, do you have that daily open so you can kind of confirm that the trends are matching up, or kind of what is your recommendation about multiple time frame analysis?
Great question. I've probably seen this over time that when we look at the various time frames that exist, I think the biggest problem that we have is a lot of people look at daily, weekly, monthly, and they're trying to confirm so much of stuff. Let the indicators do that. You work with one time frame, and that's what I like to focus on, one time frame, the time frame that I am trading on, instead of looking at different time frames. So like I said, I really have the daily where I'm trading my shorter term investments, and I'm looking at my 60-minute for my very active trading, where I end up doing trades typically for anything between 2 days to 5 days. So stick to one time frame to start with, because looking at a lot of time frames often leads to confusion more than confirmation. There are people who look at a daily and a weekly and a monthly, and by the time all of them confirm, you probably are at a 20 or 30 bar high. So I am totally against the school which thinks that, oh, you only trade when you have all the different time frames in sync. Well, you're obviously very, very late by then. And well, if you focused on one time frame, you're going to be doing a lot less and yet be more efficient, because The indicators, for example, like the trend decider that I use, uses already the daily, weekly, and monthly. Or say the RMO super filter, it's using so many multiple indicators, both on short-term, long-term, and medium-term profiles. So use more efficient indicators, focus on one time frame.
All right, a comment from Trey. Trey says, I love the RMO more than you do. And I think he was talking about me, so, but in any case. A question from Dennis. Super filter, does the super filter take volume into consideration?
No, it does not take volume, but the zone detector does.
Jack says, and this is just a comment, thank you, I learned more today than all month. Rahul, oh, it went off of the screen. Hold on just a second. Rahul is so good at splitting molecules into quarks for us to see. You guys at MetaStock and Rahul are the best. Thanks, Jack. That's really nice. I'm glad I bought almost a month ago, but only starting really to learn with Rahul now. So that's a pretty nice comment, right?
Thank you. Good luck, guys. I mean, I totally appreciate. See, I try and always tell people that become independent. Don't depend on someone else for your trading. And I think when, these are tools which help us channelize. So really good luck. And I really think if all of us try and do less, but do it in a more focused way, we'll do so well. I can tell you that from experience.
Sarosh asks, in these models, do you recommend buying above the high, like in the RMO model?
Right, absolutely.
Okay, go ahead. I'll let you answer that one, and then I'll
Okay.
do the second part of the question.
So you definitely want to buy above the high, particularly if you're using the super filter, if you're using the trend decider, if you're using the SWI, if you're using all the different indicators. We want to buy above the high because we're buying strength. We're reconfirming. If you think something's bullish, the least we can confirm is, okay, just go above that bar's high. Now, the only exception is for those of you folks trading options, we're buying when the RMO 2 pulls back to zero. When the market's dropping, you're buying those calls. So that's one place where you actually want to buy as low as you can, right? So you don't need to put in that high-low rule there.
Generally, how long do these trades last? Was the follow-up question for that.
Okay, and which module are you talking about? Because they could be all very different.
All right, so let's just say generally let's say the counter trend indicator, I guess.
You see, typically the best way to do it is always think that no trade is going to last less than 10 to 20 bars. So that's a rule of thumb that I use, that whenever I get in, I always think that I do need to keep about 20 bars in hand. And the best way is to really move on with a trailing stop.
William asked the question, how does ATM work with FX?
So with FX, I think the biggest drawback sometimes could be that you don't have volume data. So stuff like the SWI and the zone detector are not to be used if you're trading the FX markets. But yes, you can definitely use the trend decider. You can definitely use the super filter, which are more price-driven indicators.
Here's one. Vijay wants to know, Vijay, I hope I said that right, at least in one of those two attempts, but when is your next live trading event in India?
We'll have that up on our website, but nothing immediately that I have. We've got a lot of assignments as of now, but nothing immediately open.
Sarash wants to know, since I have the super filter now, do I still need to use stops?
Yeah, we definitely need stops. It's definitely a wise idea to use stops, and probably it's essential in our trading. It's I cannot emphasize this more. Don't trade without a stop. I too make loss trades. If you're thinking that there's a holy grail, there is no holy grail. These are tools to help channelize you, to help save your time, and to help get you more efficient. So use a stop. If you don't use a stop, it's like walking on the road without wearing clothes. That's how succinct I can be about it.
Okay, for time, we're just going to do two more, I think. So George says, during the counter trend indicator, you mentioned a moving average. Was it a simple or an exponential?
It was an exponential average that I used, and I reckon you can use a 30 to 40 period, whatever you're comfortable with.
Jamie asked a question, if I trade options, do I need to use all of these indicators?
No, you do not, but let me give you one heads up here. So you're using the RMO 2 pulling back to zero. So just to recap, let's say that blue RMO 2 plus comes to zero and you want to buy calls, check you've got a 3 or 4 bar drop in terms of price when you're buying the calls. Ideally, you want to do it when the zone detector is active or actually dormant because the volatility is low. So just keep those 2 or 3 pointers in mind, and that should be good enough. The other indicator I tend to use over there is the super filter. If I see that the market's also light blue or dark blue when I'm buying the calls, please, that's definitely a positive.
EC Ren asks, and I think this will be the last one we have time for, but if a trade is not triggered at the signal bar, do you set a new buy trigger for the next bar?
No, we would really buy above the high of that signal bar. So let's say you have a super filter breakout or a trend decider breakout. You want to buy above the high. Now, it does not necessarily mean that it will cross the high the next bar. It could cross it 2 bars later, 5 bars later, 10 bars later. As long as the trend decider signal stays positive or whatever indicator you use stays positive, whenever it kicks out that high, that signal is valid.
Okay. Rahul, I want to say thanks for coming in again. I understand the time was a little more convenient for you today.
Oh, absolutely.
Well, I want you to have a good evening. Enjoy your Sunday tomorrow. And I just want to thank you for your time. We always love having you in here, and we'll definitely invite you back.
Thank you, Jeff. I pulled you out on the weekend, and thank you, everybody, for attending. You gave me your time, and you gave me your precious time. And I appreciate it, and this is great. I always tell folks, if you're taking out the time to educate yourself, this is a great step that you're taking. You have to keep the learning going. We never stop learning, and I think we'll go places if we have this approach to trading. So with that, well, thank you, everyone. And just for those of you wondering when is the next webinar that we're doing, so the masterclass where I'm going to talk about the power screener and how to integrate a lot of stuff is going to be on the 10th, and Jeff will help you with a link to register or guide you how you can do that.
In fact, I put the slide up. So it's May 10th. It's 11:30 a.m. Eastern. And actually, that was a question that came up. It's 11:30 a.m. Eastern, and it's a master class. It's going to be more of a training class on how to use RMO ATM and the power screener. He's going to cover a lot of stuff. As you see, he's very, very thorough. But he's going to talk about choosing indicators and time frames, how to set up alerts using auto sorting within the power screener, how to set up multiple pages. So it's going to be a great class. The way that this class is going to particularly work, just to kind of give you guys some ideas, this one is a training class that we're going to do for customers of ATM. So we really want to be able to kind of keep the class size and be able to sit down and answer questions with you and make it very, very valuable. So what will happen is everybody on Tuesday, what I'm going to do is I'm going to pull a list of everybody that's registered for ATM 2.0. And I'll just send you a dedicated link that you can go in. It'll take you straight to GoToWebinar. You just register with the class, and it'll log you in. Similar process to what you did today. It's just going to be kind of a bit of an exclusive audience. Jamie asks, will it be recorded? The May 10th class will be recorded, and I'm going to use that same list for the people that are ATM users to send that recording to them. So, in addition, everybody asked about recordings. We did record Thursday's session. We recorded today's session, and on Monday I'll send you a link to both of the 2 sessions that we've done as well, regardless of whether or not you're an ATM 2.0 customer or not. So, in any case, let me go ahead and go back a little bit in the slide. That question came up, so I skipped a little bit ahead. But the ATM is, as Rahul said, one of our most popular add-on systems or add-on methodologies for MetaStock. Comes with the power screener. The power screener is amazing. You can go in there, you can kind of set up all your indicators, you can set up RMO indicators, you can set up other indicators, you can track positions and see P&L in a fairly real-time basis if you're using it with real-time. It also works with our DC data. It works with either MS Local, which is the new data format that we just launched for MetaStock, or MS Legacy, and it's a really, really cool view. It's something that Rahul worked with his programmers to actually put together for the ATM product, and it's very, very unique. We don't have any other products that do anything like it, so he did a really, really good job with that. In addition, he covered the systems very, very well today. You've got the breakout catcher, the counter trend indicator, the RMO2, the new ATM SWI, the trend decider suite, and the ATM RMO. So those are very, very good. I'd recommend that you try them out. You can do this on a monthly subscription, and it's just a month-by-month type of a payment. You can also prepay for it by the year. If you prepay for it by the year, we'll give you a 20% discount. And I've actually got pricing. I talked about the masterclass. The masterclass is included. We're going to sit down with you and kind of make sure you understand how everything works, how it all gets structured, how it all gets put together. But normally, the retail price for this is $129 a month. If you pay for 1 month, if you sign up as part of the webinar, we'll give you a $99 per month price for life. So you'll never pay the normal retail price. You'll just pay $99 a month, and as long as you keep that subscription active, you're going to go ahead and retain that pricing special. One of the things that is not on the slide but should have been is we do have that annual rate. It's $950 for the year. That saves you about 20%. And if you sign up for that, Rahul will have a member of his team actually call you and help you configure it, make sure it's set up and running, make sure you know how to use it. They'll do a very, very good one-on-one coaching to help you get that going. So you can take advantage of either of those. Give us a call. We do have one person here today on our sales team. He's going to stay as long as he gets phone calls. So give us a call at 800-882-3040. You might have to be a little bit patient. It's a it's a pretty full room today. Or you can chat online with us at metastock.com. If you're international, you want to chat online with us, that's a good way to get a hold of us. Chat online at metastock.com/saleschat. So there are a few more questions that came in. I'm going to look at the list real quick. If we didn't, there's some questions. I'm going to go ahead and put this on here just because we kind of, there'll be some questions that I can't answer by myself here. But if you email me, we'll kind of get some answers. I'll kind of send a list of questions to Rahul for you. My email address is jeffrey.gibby@metastock.com. And if I can't answer the questions, I'll go ahead and answer them as well. Mark says, thanks for a great webinar and a great presentation. The next webinar, to reiterate, Musa, is our masterclass. So let me just go back one slide here. It's on May 10th. It's at 11:30 Eastern Time, so that's the time in New York. Okay, and here's kind of the short list of what we'll be talking about again for you. Jaime, I think I answered the recorded question for you, but in case I didn't, yes, it will be. What I'll be doing, Tony, is I'll be emailing you the registration link on Tuesday. So if you want to email me, I just put my email address. I do have the registration link ready, and I'll be happy to send it to you early if you really, really kind of want to get in line for that class, okay? Okay. You're welcome, George. George says, Jeff and Rahul, thank you so much. Thank you. Tony, thanks for the suggestion. I'll bring it up as an option. We don't have an option for a one-time purchase at this time. VJ, I will make sure to send you the webinar for the masterclass. Thank you, guys. I really appreciate your coming and spending your Saturday morning with me. I hope it was enjoyable. I hope it was worthwhile for you. And just because here's the phone numbers to call in again. It's 800-882-3040. You can chat online with David, is the guy that's working today, metastock.com/saleschat. Okay, and just because I'm a fan of these video feature that GoToWebinar implemented, I'm going to leave you with another video. Thanks for coming, and I really appreciate it. And thank you again, Rahul, for your time today. Okay, have a good weekend, guys. Have a good Sunday.